Couple fresh breakouts today and some good movement in the key categories of tech that are adding fresh catalysts for bulls. Green lights on stocks and crypto. Not changing bonds in the dollar, but be aware if jobless claims are a mover tomorrow, then maybe we will need to revisit some of the trend that has been short bonds and long dollar. Right now, let's talk stocks. So that's where the story is. We put intraday highs in for the S&P 500. Didn't quite close at them. That's all right. Everybody was kind of watching that 6,100. I think we all knew that that was going to be a little bit of pushback. A nice big round number at the old highs. So intraday put in the record. That's obviously good. But what's even more important is that under the surface, you had a really important group come back to the front. It's the good old semiconductors, the classics, the beating heart that was a little bit stagnant for a while, actually. Keep in mind that we've had some decent breadth participation. Advanced declines have been improving. Yesterday, we saw the Russell rip. Today was more of that pure tech move. And that might be frustrating for stock pickers who are trying to look for other ideas, but it is what is the most powerful and reliable at the index level. Not a coincidence that we set new highs on a big tech day. Semiconductors had been range bound. They're in the white here, the SMH ETFs. This is the chart I've been moving through all day. We had this area that we were stuck in since October. Nice breakout. Happens as the S&P 500 also pushes to the intraday high. Now, do you look at the SPX and call it a major breakout? No, but still, I mean, this is pretty good stuff. And it looks like we are firing on all cylinders. Some days we get the rotation, and so over the longer term, you're seeing improvements of those breadth measurements. But then on the daily, we're going back and forth between leadership, and that's fine. We can do hot potato all day as we break out and make new highs. One thing I might be concerned about is the possibility of more yield curve contraction. That could be if we do see deeper 10s to 2s inversion. But let's not sweat it right now. I'll keep an eye on it, and we'll see what happens around jobless claims. A little bit of a pinch in the curve. I still feel is the least favorable version of the yield curve, but nobody's really sweating that right now after the commentary we heard from Waller and after the commentary that we've heard from the Fed, generally still finding their objectives more geared towards keeping the economy strong than having to go toe-to-toe and battle inflation. That might be a second half or maybe a couple months ahead of a story if we start seeing inflation creep up while we get new tariffs and all that, but there's a lot of speculation in that realm, and as I've said about the political stuff from the beginning, really be careful trading on that. What is still at the core of this market is technology. It's what always is, the earnings power of tech. Now, there's some bubbly stuff. There's some more speculative stuff. Look at the chart for the quantum stocks, ripping QTUM, the ETF that's got some of those big popular names in there like Rigetti. But regardless how you feel about how early it might be in that technology, I always say price is king. And this is a pretty good looking chart. You're coming up on old highs, not exactly a breakout yet, but you don't have a bearish divergence. We haven't put in the highs. We're picking up a little bit of momentum, kind of got an ascending triangle looking thing. All you need to do is get a couple more decent days for the quantum stocks to easily envision a breakout, and that tells us that animal spirits are still pretty high and strong. So don't run against that herd.